Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3-LIVE.
Good afternoon, everyone. Welcome to the recap. I'm Laz. It is Tuesday afternoon, and let's just jump right into it. A bunch of things I want to cover today. So let's start with the S&Ps. We're going to look at the spiders here, and there's really not much that I can say that we haven't said. This market continues to build build higher highs and higher lows and grind higher. It is certainly not a rally that is robust with momentum, but we really haven't seen any selling. Here's just sort of a snapshot here of the S&Ps since January 1st. We have that very convenient gap up. We started the new year, and we have since just methodically grinded higher day by day by day, really only seeing throughout the last 4 or 5 weeks less than a handful of days where we've actually pulled back. So this market continues to go higher. We did see a little bit of a pullback late in the session. If we're looking at sort of the here and the now, we have our last breakout area, which was right around 151. You can see the market broke above that, holding today, even making another new high late in the session. Let's look intraday here. You can see later in the session we peaked around 152 and a quarter, 152.30, and then came off a little bit, but overall, nothing to say that anything has really changed in this market. Again, still looks like it wants higher, based on what it's doing right here. I do want to point out sort of a monthly look, and the reason I'm going to go monthly is because you got to consider everything. And when you're a trader, as I always teach the students in my active trader program, we are as technicians and traders, we are very sensitive to data. What do I mean by that? Well, we're data collectors. We have to identify areas of prior support, resistance, patterns, all sorts of information that we can then, put into our brains and then make decisions about higher or lower, or decisions, as I like to think about it in terms of risk. The reason I show you this monthly is, again, I want to just highlight this upper level here in the S&Ps. This is the spiders. This is a monthly. This goes back to about 99, 2000, and you can see this price spike high around 157 in the SPYs. So 155 to 157. The reason I want to bring this up is not that I want to show you where highs are, is that we know that there is substantial resistance up here. How do I know that? Because as price traded up in here, it then had the following results. So we need to respect that there is a heavy area of supply or resistance, just a stone's throw above. So if you're looking to get involved with this market, be very, very cognizant about the areas or levels that you're buying in terms of, is risk the least here or is risk substantially higher? That's how all successful traders essentially, train their brains to think. Where is risk the least? Where is risk the greatest? Now, I don't have my crystal ball, and I don't know per se if we, rally through that level, and we very well could. That's not to say we can't. But even still, I'd still rather buy a pullback than chasing, any upside momentum, feeling like I've missed something or this market's going to go without me. The market will not go without you, and at some point there will be a very, very coordinated and healthy constructive pullback from which to potentially say risk is now substantially lower than it was, a week ago or 2 weeks ago or a month ago or what have you. So it's that thought process that we always teach here at T3 Live that I think will help position yourself to not only make money, but position yourself in terms of, lower risk areas of entry, as I know Scott always talks about. So that's sort of the bigger picture, as well as the shorter term picture here with the general indexes. The one index that certainly, not performing is the NASDAQ. And we look at the Qs, the triple Qs, the NASDAQ 100, just really nothing happening in here that's constructive. Whereas the S&Ps are making higher highs and higher lows. you have a very, very choppy, non-committed, non-directional pattern here. So technology stocks, which is really what mostly makes up the Qs, not performing. Is it a cause for worry? Well, I'm not going to say it's a cause for worry, but again, as data collectors, let's read the signs and let's make decisions about risk. Certainly, you'd want to see the Qs starting to trend higher with the broader markets. You see the diamonds, the Dow legging higher, the Russell legging higher, but the Q is a noticeable laggard here overall. So we'll see how that sort of pans out. I next want to flip into precious metals, gold. We've talked about gold, several times in the GLDs here as the ETF. Certainly just no buying. We have our new sort of, level down here around 159. You can see he's held, a couple of times, but certainly not showing you any impulse or any momentum, and certainly not looking like it wants to go higher. Here's a weekly of the GLDs. And again, our bigger macro support down here just under 150. But this pattern here, a little more micro, and I'll zoom in. This to me looks very much like a bear flag, and this looks to me like at some point in time we are going to break lower there. So we'll keep an eye on the GLDs for a break there. Again, this is a much larger time frame, and again, it's showing you sort of a much more robust look at what's happening overall. So like I said with GLDs, we're now into 2013 for the better part of 2012, and even the last half of 2011. We haven't seen much opportunity here in GLDs, except for shorter term, quicker, more selective type, trades. Obviously, we have this upper band here, this upper resistance, and you have this lower range. So we're going to watch to see, how this resolves itself in the, I think in the coming weeks, more so than anything else. I do think there will be a resolve here in GLDs in the not too distant future. And again, we can go up another time frame. We look at a monthly. And again, the last 2 years or so, really no real momentum here, no real trend. Is this going to break higher? Is this going to break lower? I suspect we'll probably see a push down to this lower support level before buyers even step in. So right here in the middle of this range, definitely a tougher trade. Again, you can kind of see a bigger picture of that range. So no real trade there, but it is something that I am keeping on the radar here, personally speaking. Let's go and look at a couple of stocks. We're going to start with Apple, obviously a very widely watched symbol. And we've been, for the most part, spot on with this stock. Even in this last little micro move, made a higher low here, and then it broke above, and we got to trade back into this moving average. I suspect that if Apple's going to go higher, you might see one more very minimal pullback, and then I'd like to see buyers step in. I'd like to see this, series of, higher lows and higher highs start to build. I do think if that can happen, you could see one more push, possibly in to fill this gap from earnings, which is just above about 500. So there could be another trade looming in here, but again, more time. This is what I would call a hard money trade, because in the short term, we have lost our downside momentum, but overall still not a very healthy looking chart. So it's going to take a lot more ebb and flow here before this becomes a very clear picture, or what I would consider something that's maybe a little bit of easier money. These stocks that are broken, and I'm going to put this in that category, do repair themselves, but when they do repair themselves, generally it's a lot harder of a trade. They don't go up the way they go down, and you might see a lot more sort of ebb and flow here. And you want to be very, very careful about chasing a stock like this, whereas, buy it on the dips rather than buying new highs. It's definitely a better course of action with a potential trade as this stock, develops day in and day out. A couple of earnings trades, again, notables today. Michael Kors, gapping up and selling off for the better part of the day. This was a good VTF trade today. You can see here's just an intraday chart. This is actually showing you pre-market, so let's change that. Let's go to my time here. Shouldn't be showing you pre-market time. Okay, so you can see gapping up here at the open and slowly just building a little bit of momentum to the downside. Put in a very nice tradable pivot up here around 63.5. For those that were on the VTF, we caught a short in here later in the afternoon against that 63, roughly 63. So it's a pivot level that I'm going to keep on the radar for the next couple of days. Again, you might see this trade come down a little lower. A couple other notables from the VTF today. The Triple D, which is the 3D printing, been in the news lately. A lot of momentum there and a lot of good price movement. Breaking down, we saw this, like I said, it's just a matter of a week and a half ago or so. Heavy volume to the downside, retracing some, putting in what looks to be now a lower high. And I would anticipate maybe coming down and possibly testing into this lower range, mid 50s to lower 50s. So I'd keep an eye on there. Obviously, your line in the sand is up here around 68 and a half. And again, SSYS, its counterpart, certainly leading the charge. SSYS, breaking down, pretty heavy today, volume rising. Never quite had the depth of retracement that DDD had, but nevertheless, some of these 3D printing stocks, XONE, which was a new issue from a couple days ago, well, it was a very nice new issue, seeing a lot of buying from 24 to 34. We've now, given back about 60%, if not a little bit, somewhere in that area of that IPO. So we're going to keep an eye on these stocks as they progress day in and day out. So a couple of notable VTF type trades there. Banks, again, very much leading the charge here at the market. Here's Goldman holding this 8-day or 9-day, whichever you prefer to look at, 10-day. Just nice, consistent buying on pullbacks. Goldman, JP Morgan, definitely leading the charge here. So if you're looking for opportunity, I've said it for the last 2, 3, 4 weeks even, you want to look to those banks to buy pullbacks. They still look very constructive. They still look very healthy, and they're still being bought on every short-term dip. Obviously, the further this rally goes, the higher the risk you're going to take, as eventually there will be a very constructive pullback there. But like I said, right now, for those looking for opportunity alongside, keep your eyes on the banks, as that really is the best and most fluid sector of cash flow in. Everything else right now is very sort of, hit and miss. You have the Apples of the world that are really more short-term day trades, cash flow type trades. You have other tech stocks not really participating. Baidu, BIDU, an earnings trade from a few weeks ago, gapping down. Really no buyers stepping into this. And if we don't see some buy step in soon, you might see another trade back down to the mid to low 80s here. So keep an eye on some of these tech stocks. It really is haves and have-nots, and some of these more momentum-oriented names. You have Priceline, another momentum name coming up in probably very soon to report earnings. So it's been a very, very constructive trade. They're the ISRGs of the world that had good earnings reports, good gap ups, still holding. Again, you got to wait for these sort of bases to form for tradable opportunities. Right here, right now in the middle of this range, probably a tougher trade. I'd probably avoid this one, but I would keep it on the watch list for something that does have potential to go higher. Google, obviously, I put right there with the banks. Been a very nice trade in Google. Today, definitely a notable day. We saw a new high, very subtle, but then tailing down late in the day. Here's an intraday chart. You can see, spiking up into prior highs or even new highs, and then sort of tapering off. So let's see if that doesn't lead to maybe a little bit of a correction here or a pullback over the next couple of days. But these are the names that I would keep, front and center on your watch list. And again, if you're not participating in the VTF or using, the tools that we provide here at T3 Live, whether it's our education programs or our intraday real-time content, again, ask yourself the question: are you really getting the most out of what we can, provide for you? As always, a planned trader is a profitable trader. Have a great night, everybody, and I will see you early tomorrow morning. Take care. I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.